Welcome to this explainer. We are diving straight into the ABH Healthcare IPO today. If you've been tracking the markets lately, you know these initial public offerings can be an absolute roller coaster, right? So we're going to break down the hard data, tackle your biggest questions, and figure out what this specific offering actually brings to the table. We'll separate the solid fundamentals from the pre-market hype, or actually the complete lack thereof in this case, so you know exactly what's going on behind the scenes.
Because, let's be real, this is the single biggest question retail investors are asking today, August 18th, 2026, as they size up this NSE SME opportunity. When you tie up your hard-earned capital in an IPO, you want to know if there's going to be a nice little pop when that opening bell rings. We all love a quick flip. But as we're about to see, the market is giving us some pretty mixed signals here, and just crossing your fingers? Yeah, that's never a solid strategy. So right off the bat, the takeaway from the source material is highly nuanced. Is this IPO worth considering? Yes, but absolutely not solely for a listing day profit. We've got this fascinating setup where the company actually shows real fundamental promise, but that immediate listing gain, it's extremely uncertain right now. If you're going into this expecting an automatic 20% jump on day one, you literally need to hit pause and look at the underlying data we're about to unpack.
All right, Section 1, the ABH Healthcare Opportunity. Let's see what kind of business we're actually evaluating.
See, ABH Healthcare is not some theoretical tech startup burning through cash. They operate a tangible, brick-and-mortar medical facility, the Anil Baghi Hospital located in Firozpur, Punjab. We're looking at a real-world healthcare provider, folks. Physical beds, real doctors, actual patients. They provide an absolutely essential service in their region, and that immediately gives this company a totally different risk profile compared to some speculative venture. It's grounded in a basic, everyday human need.
Moving right along to Section 2, Fast Facts and Key Dates. Okay, let's get into the mechanics. The issue opens for bidding on August 24th and wraps up on the 26th. They're targeting the NSE SME segment, which is super important to note because SME IPOs have totally different lot sizes and dynamics than your standard main board IPOs. The upper price band sits at 102 rupees, bringing the total issue size to a relatively modest 35-ish crore. It's a small issue, and small issues can sometimes mean high volatility, so definitely keep that in the back of your mind. Now check out this specific minimum investment figure, 1,224,000 rupees. Because this is an SME IPO, you can't just buy a handful of shares. There's a mandatory minimum lot size of 1,200 shares. So priced at that 102 rupee upper band, your minimum buy-in is over 1.2 lakh. That's a serious chunk of change to lock up in a single small-cap healthcare play. Deciding to jump in here really depends on your personal risk tolerance.
And if you do decide to part with that 1.2 lakh, here's exactly how long your capital is going to be locked up. Bidding closes on the 26th. You'll tentatively find out if you even got the allotment on August 27th. Then, shares are expected to finally hit the secondary market on August 31st. So for almost a week, your money is completely tied up. That's an opportunity cost you definitely have to factor into your overall strategy.
Okay, Section 3, the financial health check. Let's look under the hood.
According to their draft prospectus, the business has some serious upward momentum. Top-line revenue jumped from roughly 29.6 crore in FY 2023 up to over 41.3 crore in FY 2024. I mean, that is substantial, tangible growth for a regional hospital in just a single year. It clearly proves they're successfully expanding their patient base or ramping up their services. And it gets better, because that impressive top-line growth translates beautifully to the bottom line. Profits before exceptional items and tax nearly doubled over that exact same one-year period. We're talking 1.16 crore up to 2.21 crore. So they aren't just making more money, they're actually keeping more of it. That is the kind of improving operational efficiency that long-term investors absolutely love to see.
Which brings us to Section 4, the missing listing gain. Here's the plot twist.
Look at this number. 0. A big fat 0. Despite the doubling profits and the solid revenue growth we just talked about, the current gray market premium, the GMP, is sitting at 0. The pre-market is completely silent. No hype, no buzz, nothing. Just for a quick refresher, the gray market premium is basically the street's best unofficial indicator of where shares are trading privately before they actually list. So a 0 value literally means the market is currently pricing in exactly 0 listing gains. And this is wild when you compare it to the broader market. Look at other IPOs launching right now. A lot of them are boasting huge GMPs. Investors are fighting to get in. But for ABH Healthcare, crickets. This complete lack of pre-market hype is a massive hurdle if you're hunting for a quick listing pop. It is such a stark contrast, right? A rock-solid fundamental business, but absolutely zero short-term trader excitement.
So, how do we play this? Section 5, the final strategy. Based strictly on the source data, here is the final verdict. If you're looking for a listing day profit, it's a yellow light. You gotta wait. For a short-term investment, it's a totally neutral hold. But if you've got a longer time horizon, that's where the green light starts flickering. It's potentially a very interesting long-term play, given their revenue and profit growth. But honestly, it's going to require a much deeper valuation analysis to see if that 102 rupee price is actually fair for the long haul.
If you're still on the fence, the sources give us this exact step-by-step playbook. Step 1, absolutely hold off on applying on day 1. Seriously, there is no rush. Step 2, use the bidding window to obsessively track the subscription figures and see if that GMP wakes up. And step 3, only consider applying for listing gains if the GMP aggressively surges to a 15 to 20 rupee threshold. If it just hovers flat at 0 to 5 rupees, avoid it. The risk simply heavily outweighs the reward for a quick flip.
Which leaves us with this final, provocative question. Look at your own portfolio strategy and ask yourself, are you just gambling on a listing day pop, hoping the market magically wakes up? Or are you looking to actually invest your capital in a growing hospital's long-term future? Understanding your true motivation is literally the only way to play this IPO correctly. Thanks for joining this explainer, and we'll catch you next time.